CPI just came in at 3.4%, meeting expectations. And that has confirmed a lot of our price action regarding oil, inflation expectations, Fed hike odds, yields USD, bond yields, and the strength of the US dollar, and the recent strong price action on gold. A lot of that we'll discuss today with the Fed meeting for September and what to expect there, what the recent bond market is looking like in terms of strength, S&P 500, Russell, and even copper versus gold, which is showing a little bit of weakness and the impacts that might have on PCE. And lastly, Bitcoin-related price action, ETF inflows, and then what the SEC is doing to support the crypto asset infrastructure. All of this and a lot more to discuss in this video. So tune in. Hello, everyone, and welcome to Strategic Markets, your place for technical and fundamental analysis all at once across many markets. And into our midweek session, what a great way to start off, but with the CPI news. Now, that has come in at about 3.4%, which was actually an expectation. So we have met expectations similar to, for core CPI as well. And if you remember, last month we came in at 3.5%. So a 3.5 to 3.4 actually is a little bit of cooling, and that's what the market's looking for. But to be honest, do you want to know where this was highly evident? This particular drop highly correlates with just oil. If you look, oil 4 weeks ago was sitting at $91. Today, it's sitting at about $90. So I'm not going to go much into mathematics, but if CPI has dropped 0.1% and like oil has just dropped $1, yeah, that seems to correlate pretty much itself that yes, in the last 1 month, there has been a little bit of a draw, and that could legitimately just be because oil has dropped that $1 and also because inflation is really correlated with oil right now. But the impacts that it's had on this other hot asset in the last 2 weeks being gold and silver following through with the price action. When we look at gold, last week we discussed the descending wedge price action that gold was having. And then if you see over here, over the week, we have actually started to go above the 20-week SMA. So a close above that could be fairly bullish. And we discussed how that breakout could result to a move of just below 30. So that's definitely strong there. But I wanted to take a bit more of a fundamental deep dive today as to why gold might be making that move. So I created a little bit of an infographic for us. You see, I just mentioned that oil has gone down. For the last 4 weeks, it's gone down a little bit. But from ever since this war started, we were sitting at the highs of $120. Now we're sitting at $90. So oil is dropping. That means inflation expectations are dropping, right? Inflation from a CPI perspective technically has dropped a little bit. So that, at least the expectation of how that progresses further, most likely will continue to drop as well. Then you have your Fed hike, and the odds of a Fed hike drop as well. And if we look over here, 60% chances that there's going to be no Fed hike on the 16th of September meeting. Well, that was nowhere compared to last week where it was just at, about 55 or just at 50-50 over here. So that Fed hike odds are now dropping as well. And then you have considerations for bond yields or the US dollar strength compared to other currencies. If those continue to drop as well, and we can see signals over here where the US bond 2-year yield has recently on the short term started to break down of this rising wedge pattern over here, which I've just boldened over here. So you can see that rising wedge having a bit of a breakdown. And then coming back over here to review, the 2-year bond yield actually has had a 4.2% decline. So bond yield has dropped a little bit. And then the DXY, which is the US dollar index, has recently dropped because of the Japan trade as well, because US made a investment in the Japanese yen. That contributes to our, the yields in US dollar drop. But on the other aspect, the bond for 10-year yields are increasing. That 10-year yield is generally a good thing because people should generally want to get more yield for investing at a long-term period. And when we talk about 2-year yield and 10-year yields, we see that this spread is increasing as well. So that means that the difference between a 2-year yield and a 10-year yield, generally you would want people to get a little bit more reward for going a bit more long term. So we've discussed on this channel in the past how that difference becoming greater is a good thing. But whether or not people are going to want to consistently invest in US long-term bonds is now going to become a question. And that is what my next slide covers. Because even though gold might be moving up because of these four aspects, there is a little bit of geopolitical certainty based on recent news events. And let's look at that in these particular three different layers. First one, which was relevant to a lot to do with the US, is when we got the weak US employment numbers last week. We had a surprise drop. The July payrolls weren't that great. So that was concerning. Then we had softer inflation. July CPI came in a bit lower. Okay. So that basically meant the price of oil was going lower. So that means that the Fed hike expectations got lower. So if Fed doesn't hike rates, that means the correlation between the rates versus bond yields is there. And that means bond yields likely drop as well. And if you are not getting the best amount of money for your bond yields, then technically, would you want to invest in bond yields? Possibly not. Add all of that to the fact that gold was forming good technical structure and wanting to have a bit of a breakout. People started pivoting away from the dollar trade and moved towards gold. Now, the layer two as well, which is where a little bit of geopolitical competition happened, is China has been a very long-time buyer of gold. Okay, so they have gone in over here and they have bought about 20 tons worth of gold in July. Then Poland's buying heavily. Then you've got other central banks buying heavily too. Korea is re-entering the market. You've got European and Asian ETF inflows. And then you have Western investors returning via their ETFs as well, because they're seeing all these other countries follow through. So that's your geopolitical competition. Add that to the America-Iran war that we're having, or the structural regime change, people are losing faith in the US economy. Slowly, maybe not in their stock market, because we've seen the stock market perform crazy due to the AI trade, but definitely in the bond market and other dollar aspects too, because they're realizing they don't want to be heavily reliant on the US dollar itself because of, let's say, the Strait of Hormuz trade, or consistently being sanctioned for being not in the same political view of America as well. Then in that case, US and China also have a lot of financial competition. So they don't want to rely on each other's currency. And China has been the biggest seller of US bonds. Add Japan to that, because Japan needs to stabilize their own currency. Then that gets complicated too. Then we have sovereign debt concerns as well, because at the end of the day, we have $40 trillion worth of US debt, and that number just keeps increasing. So if that debt is just going to consistently weaken the US dollar, what's the point of earning a interest rate on that from a bond? Then when we have physical gold shifting towards Asia and some structural changes for silver, we are seeing this trade follow through very well on a fundamental perspective in the strength of gold. And that's why gold has had such a strong breakout. Now, that is relativity for American dollar weakness contributing towards gold strength. And if we were to talk about silver on that, well, you can see silver has been breaking out, but it's not been as strong as gold for two reasons. First of all, the demand for silver is not as high as gold because, like I said, China is accumulating. All these countries see it as a safe haven asset. Silver hasn't earned that status yet and hasn't for many centuries, but it's just following in the footsteps of gold. So that's why it's having its breakout. But then when we look at other aspects of the American economy and not just the bond or the dollar, we have seen, let's say, the SPX. That's been moving towards our resistance line that we have been trailing for a long time now. When we look towards the Russell has broken out as well. And now we're going for higher highs and higher all-time highs, which is generally pretty good for risk on assets. So we'll see that flow on likely in crypto, and I can discuss that a little bit. But another indicator that I was looking to flow on towards crypto influence in the positive side for copper versus gold, that one for the last 2 weeks has been a little bit negatively influenced. And that is likely because gold is moving up at such a rapid pace. But Steve was also mentioning to me earlier before this video is that this could have concerns for PCE, which basically is a reflection on manufacturing in America too. And look, that's definitely a consideration, or it could be just a consideration with recent strong movement in gold. All things are in play, so we'll just keep that in mind as we progress. So, on other terms, though, Bitcoin's price action, well, it's still within this descending wedge pattern over here. So, nothing much to discuss. No clean breakout on this particular chart. So, we're just going to have to wait and see. This is on the linear graph. So, I'm more fan of a logarithmic, but this is coming out a little bit very clean. So, definitely will be very interesting to watch. Then, when you have considerations with the fact that the White House is now vowing to pass the Crypto Clarity Act in September, that definitely is going to have a strong momentum build up around the September timeframe. So keep that in mind. And some other supporting evidences that are coming through is Bitcoin's ETFs drew over $850 million in net flow last week itself. That's their strongest weekly performance since April. So literally since the last 4 months or so. Since then, we have had the strongest performance for ETF inflows, something to keep in mind. And one other thing is for Bitcoin, the net position for CME Bitcoin futures to be longed has actually recently started going green as well, which means more and more hedge funds are taking a long position, which is where my thesis for this liquidation heat map goes. I have mentioned in the past that there are probabilities that we go down to test this $60,000 level to pick up liquidity at the bottom side. But here's the thing though, if smart money is positioning themselves right now and they have belief that this market goes up, because basically seller exhaustion has already occurred and everyone who needed to sell has probably sold in the last 4 weeks, then we could be at a point where the smart money are positioning their longs now, and we, after breaking out of this descending wedge pattern, could have upside, and we don't go down to the 60K level. And look, although it's only $3,000 below, there, anything could happen, and we got to be open to anything. But yes, this liquidation heat map, just because there is liquidity down over here, it doesn't always have to mean that we have to go towards that particular level to test that liquidity. But just something to keep in mind with regards to how smart money positions themselves. On the other aspects, though, our next favorite altcoin, which is Ethereum, well, Fidelity, which is a 7.8 trillion financial entity, is actually looking at enabling Ethereum staking and quarterly cash payouts for its spot ETF holdings. So this is a good deal because if you didn't know this, Ethereum as an altcoin actually can earn you yield. All right. And it can do that through its staking mechanism where you basically put up your Ethereum on the blockchain for the use of securing the blockchain and basically saying, I don't plan to move this particular asset. And in return, you get a little bit of a reward in the most simplest way I can put it. Based on that, now for big entities like this to be able to give you a dividend reward for it is a very big deal. And when you look at that particular news event and then you look at Ethereum's price action, you realize that it absolutely did shit out. But that's okay because we are very used to that. And right now, this is a bearish sentiment market. So with that being said, you like staking ETFs, dividend income, these are all good fundamental news, but this is just not the right narratives for the crypto aspect. So Ethereum has been slogging along this particular, triangle pattern that I've been discussing over, I think, months now. And yeah, it's literally just gouging its way to the side, which is a little bit sad, but that is what Ethereum does unless it has a bullish narrative. But Ethereum versus BTC though, which is basically our strength for altcoins, that one's recently been stabilizing and hasn't been dropping that strongly negatively. So when that starts moving in a different direction, we'll see how things go. The other aspect that I wanted to discuss, and this is following through what we discussed last week, is that the SEC is moving towards letting Wall Street's biggest stocks trade 24/7 on the blockchain as soon as Friday. This follows because Clarity Act did not pass last week. So the SEC and CFTC said, hey, you know what? we'll push our own rules forward because that is what's right for the crypto community. And this is their first start towards it. So they will basically give an innovation exemption that will allow tokenized versions of stocks such as Apple and Nvidia to trade around the clock on blockchain platforms without full registration. So this is really cool because this is a move function for crypto related projects that do allow tokenized trading to be able to do this and be able to provide more value than what the Wall Street, New York Stock Exchange does. And one of the assets that we really follow through with this channel for an altcoin perspective is Ondo. And Ondo has been showing us that, like when it did break out, there was a lot of bullish sentiment because of Clarity Act passing, and then Clarity just kept getting delayed, so Ondo moved down with that too. But recently it's come to test the 20-week SMA. So how I personally, I got profits out at my 40 cents level, and because my second level was set at 50 cents, but then it never reached to that level, and I basically stopped out myself at 33 cents because I entered at 31 cents, so I just wanted to take profit at 33. But for anyone in the future, keep an eye out on altcoins like this, or on altcoin like Cantor, which is another one, which is a bit of a tokenized stock exchange coin, and see how those projects particularly perform. But that is my base analysis for today. I'll pass it over to Steve on what his thoughts are.
And well done with your Ondo trade there as well too, mate. That was pretty good. You set good target area that you're interested in getting out. I think it was 42 cents that you originally had set that at. You did that whilst you were even away in Bali and just let it do its own thing.
Exactly.
And well done on that. And that was pretty much about it. And raise your stop to above the entry level. You can't be happier with that in terms of the way that actually worked out. So well done with that. And that's a great way of being able to do the trade. You set it, you were happy with the result and happy with the way it actually worked out for that there.
Believe that it goes to 50 cents and it just doesn't. Sometimes you just got to take the next thing and you don't get your initial target that you hope for, but that's trading. You're not in it for emotions, you're in it for your trading plan.
All right. So whilst I've put this new chart back up in terms of the TLT, I wanted to also allude to everything you had actually mentioned as well too, Yash, which I must admit, having a look at those infographics that you created there as well, brilliant job, because you have brought together so many different facets of the market into a couple of different infographics there. There has been so many factors that have been influencing the market one way or the other, pushing and pulling, and there's so many toggles and so many different factors that are coming together. And you really brought it together beautifully with those infographics. Absolutely. One of the key central factors behind all of those was this chart overall. And we've been actually covering this for quite some time as well, and it has been the TLT. One thing I want to raise with this is you can see the very, very clear, definitive downtrend, and we've been covering this for a very, very long time, ever since it had actually looked like it was going to break out above the yearly VWAP up here, and it did look quite strong up at that point at the end of June. And then after it broke that VWAP right at the end of June, it has just been on a continual downslide and a continual downtrend ever since. Now, this aligns extremely well with everything that you're mentioning in terms of the decreasing aspect in terms of the actual bonds themselves. Whether or not this is actually along the lines of, say, the major holders like China and Japan actually selling off, could be war initiated, all of those kind of aspects there to raise more funds, maybe even a bit of economic warfare perhaps in terms of devaluing the US dollar in itself as well too, in conjunction with the Japanese yen intervention that actually occurred as well too. It could all be all of those factors all involved. But from a technical perspective, we can definitely see that we've been respecting firstly that yearly VWAP as well as the quarterly VWAP being the pink line, but on top of that as well, all of these other moving averages. It's all very evident and very clearly shown in the chart. What does this mean for everything overall though? It generally means that we've actually had rising long-term yields. That's the most important thing to keep in mind. We've had the rising long-term yields as actually discussed by Yash a few moments ago. The 10-year yield has been on an increasing trend all of the way through, and that was very, very clearly shown by Yash. But in the recent times, the shorter term bonds themselves have actually still been declining quite significantly, and that's associated with the declining now, especially in the short term. Go back to what Yash was saying before, the declining yields in the very, very short term in terms of breaching the long-term upward slope. And that's what's going to be causing more of that potentially increasing gap between the 10-year and the 2-year. So I just want to reiterate that in terms of what's particularly going on, especially in the context of this 10-year, sorry, I should say longer term in terms of 20-plus year yields overall when we take a look at these particular aspects here when we're looking at the TLT. But I just want to throw a grenade into the situation here as well too. If we've got this circumstance where the longer term yields, say be it the 10-year, 20-year and so forth, are actually now starting to pay better in terms of yields, could we, and I'll re-emphasize that, could we see a point at some stage in the future where we may potentially see a floor in the price of these bonds where all of a sudden people start saying, you know what, we can actually be starting to get decent yields here. We actually may start to buy some of these bonds to actually take advantage of the yields we're getting compared to the short-term bonds. That could actually occur. So do keep an eye on this as to whether or not that does occur. But there is a caveat to this. Be aware that obviously, in order for a trend of this nature to reverse, it would need to get above these short-term moving averages and also above the quarterly VWAP as well. They are the big caveats. And we'd also need to see a reversal on the lagging indicator here as well when we take a look at the Ichimoku curve on the left-hand side. At the present time, it's very, very clear we have lower highs and lower lows there on the Ichimoku curve. And on top of that as well, this baseline is well above the Tenkan-sen trend line. All of these factors would need to reverse and head to the upside before we can say that the downtrend in terms of the long-term bonds is broken. So, some food for thought there in the grand scheme of things. Now, when we take a look at gold, because that's another area where we really, really need to keep an eye on, you can really see that gold, I should have alluded to this, as soon as we actually had these higher highs and higher lows forming, and we've been talking about this over the last couple of weeks, that trend really has taken off and done a very, very good job. And we've been talking about that as well in terms of the lagging indicator in particular, especially as soon as that lagging indicator had crossed over that Tenkan-sen blue line. So they were all confirmatory aspects there. And as well, Tenkan-sen crossed over that baseline here. So ever since all of those aspects had occurred, bang, we've had a very, very good, strong trend in the upward direction. Further confirmed now in relation to resistance now turning into support, and that resistance from back in October. We now also start having the 100-day moving average being the white line, as well as the 50-day moving average starting to turn and starting to curl in the upward direction. So that's even further confirmation as to exactly what's going on in terms of more of a long-term trend that's actually going along. Do be aware, though, we are actually now testing this 200-day moving average being the red line here. So we may just get more of this sideways action, especially after a parabolic move. And we're talking about that over the weekend as well in terms of potential sideways action after such a parabolic move. With silver, we are getting that sideways action coming in right now as we speak after that parabolic move as well. And there's nothing to really contend with at the top end of this move at this point. It's just happening after that big move. So potentially as well, wait for it to come back towards the short-term moving averages at this point as well, and then we'll see how things go from there. Interestingly enough, in terms of silver, it may actually be a little bit of an approach towards this baseline area with the lagging indicator that might be actually responsible for a little bit of a pause in terms of the price action as well. So watch this space overall. Now, copper versus gold was an aspect that Yash was talking about as well, and you can see the price of copper actually retreating individually on its own. So very, very interesting overall, and you can really see lower highs and lower lows on the lagging indicator here as well in terms of things. On top of that as well, we're actually starting to see a little bit of a breach of that Tenkan-sen line with the unit prices. So we've got a few factors coming along here. Testing as well with the short-term moving averages. So a bit of weakness coming in with copper on its own. And combine the copper weakness with the gold strength, you can really see why copper versus gold is coming back at this point in time. Remember back to Yash's presentation. On the weekly chart, there was a very, very strong bearish candle in terms of a bearish engulfing candle, and that's now being confirmed in terms of a swing down on that weekly chart as well. So there's a lot of factors coming into play in terms of weakness there. Think back to that discussion as well. Could that be a bit of a warning sign in relation to the upcoming PCE in tonight's trade? We'll wait and see. Iron ore, a little bit sluggish at the moment as we're still trying to get through these short-term moving averages here. However, there is a reasonable amount of strength coming through in terms of higher highs and higher lows on the lagging indicator. Nothing to write home about as yet, though, because we still have weakness with the Tenkan Sen being below the baseline. So not really anything to hang your hat on at this stage. So we'll wait and see how things go there. Now, in terms of the indices, we'll have a quick look at those as well whilst we're at it. Sideways action, getting a bit choppy here at this point in time. No real clear direction in terms of the SPY at this point. We're just basically waiting and seeing, but that's no real major surprise at this point when we really think about things. Because, as we were talking about over the weekend, are we seeing a bit of an overextension away from these short-term moving averages at this point? Maybe we're just waiting for these short-term moving averages to catch up to the price action. That could be what's going on at this point, or we might be looking for a bit of a pullback. We'll wait and see. The Qs in terms of technology, maybe the same kind of situation going on there. It's a bit congested there in terms of lagging indicator in terms of the unit prices. So that could be the situation that's going on. We go down to the Dow Jones. We are getting that pullback towards the short-term moving averages, as you can see. And of course, we actually can see it here as well with the lagging indicator. Lower highs and lower lows are actually forming. The Russell, Yash pointed out in terms of higher highs and higher lows coming through there, as well as all-time highs. You can actually see it there with the lagging indicator as well, higher highs and higher lows. So the Russell is actually the highest performing index out of the four at this point in time. And that's probably also related directly to the fact of the bond weakness at this point as well. So keep an eye on all of these factors. Interestingly enough, neck and neck in terms of the Tenkan Sen and the baseline at this point in the short term, but we're above the cloud for both of those factors as well. Be a little bit wary as to whether or not we might be a little bit overextended with the short-term moving averages, though. So that could be something to keep in mind. Let's have a look at where the quarterly VWAP is in relation to all of this using the IWM. Actually very, very far away from that. So there could be a little bit of overextension from that, and whether or not we may actually come back towards that will be very, very interesting to see. So yeah, I'm taking with a bit of a grain of salt in terms of the PCE results. We may have a bit of a pullback with all of that in terms of the indices coming along. So that could be very, very interesting to see how the result is. Obviously, the result itself in terms of the PCE is not the most important thing. It's how the market reacts to it all. That is what's most important. In terms of Brent Crude, we're basically still stuck between both the yearly VWAP and the quarterly VWAP at this point, above the short-term moving averages and also above the 150-day moving average, being this the orange line as well. Yeah, higher highs and higher lows on the lagging indicator at this point, but interestingly enough, we've actually got the baseline above the Tenkan Sen, so a bit of weakness coming through, a bit of indecision, I think, more than anything else, like we talked about on the weekend as well. Interestingly enough, it has actually closed above the 100-day moving average, being the white line, but higher highs and higher lows on the lagging indicator, as you can see, and it has actually broken above the baseline. So a bit of strength coming through there, but yet again, take a look very similar to the Brent Crude. We've actually got the baseline above the Tenkan Sen. So interesting. Still some indecision, bit of mixed signals going on overall too, and it hasn't broken up above the cloud. So we need a bit more clear, definitive action going on here before we can really say one way or the other as to exactly what's going on overall with this. But interesting to note, we are above both the yearly VWAP, being the green line, and the quarterly VWAP, being the pink line. So probably a little bit more strength in terms of the USO, but once again, still a little bit of indecision there with a mixed signal in terms of the baseline above the Tenkan Sen. One interesting thing that I am noticing throughout all of this, though, is the fact that our VIX is getting lower and lower and lower and lower. I personally feel there's a heck of a lot of complacency going on in this market at this point. Everyone is basically just saying, hey, no worries, everything's going along really, really smoothly, all those kind of things there, no problem whatsoever. But as you can see, we've got a lot of indecision in the SPY, we've got a lot of indecision in the Qs, and a lot of indecision in the Dow Jones as well. If there's a lot more of this indecision that keeps on going, even though we've got the VIX still declining, could this complacency all of a sudden turn into something where the VIX spikes? Be very, very wary of that and really keep an eye on that, especially considering the fact that we actually are now starting to see the dollar remaining stubborn once again. And as we've always been talking about, the fact that this does remain stubborn can actually show that investors remain averse to the market overall as well too. So that can be something of interest. This former resistance from back over in December still is acting as support. And even though it's tried to actually break through that a couple of times with those wicks, as you can see there from the beginning of August, it can't do it. So it can't actually break down below that area. It's remaining in a little bit of no man's land. It's remaining around about 100, but it can't go down below it, and it can't really break up too much high above it. You haven't seen any more yen intervention at this point, but expect something or other to potentially have an impact. Speaking of which, we haven't looked at the Australian dollar versus Japanese yen for a while. That's remaining fairly stable at this point. It hasn't broken up above this quarterly VWAP again here. So even though it's interesting that it's stayed well above this yearly VWAP at this point, meaning it's remaining fairly stable in terms of the markets overall, remembering the Australian dollar yen ratio generally indicates a strength in the markets. I'd personally like to see it above the quarterly VWAP to say that we're really, really showing a lot more strength in the markets overall. But we'll wait and see how that does go. Now, it would be remiss of me not to look at crypto markets, because otherwise Yash will definitely hit me over the back of the head. Interestingly enough, in relation to this, we are still seeing some interesting weakness. Now, why I'm saying that is baseline is still above the Tenkan Sen when we take a look at the left-hand side. However, the Tenkan Sen is starting to actually creep upwards. You can see that blue line starting to get up towards that baseline. So interesting stuff there. However, the lagging indicator, you can see that green line there, has actually creeped beneath the Tenkan Sen over here. So we are starting to get a bit of mixed signals here, a bit of strengthening coming along over on this side, but a bit of weakening coming along over on that side. Regardless, we are beneath the support resistance line from back over here in April 2021, I should say. And we are below the short-term moving averages. And we're also below the quarterly VWAP, being the pink line. So weakness is still persisting in relation to Bitcoin. But let's just face it, there really hasn't been a large amount of movement anyway. It's not really gyrating up and down massive amounts. Ethereum has been the major driver for quite some time, but it's still really doing very, very little at this point. We are starting to get a little bit more strength in terms of the Tenkan Sen, that blue line, coming back up to potentially meet up with the baseline. Let's see what happens by the weekend. But we are getting some weakening going on in terms of the lagging indicator. It's now getting really mixed up with all the unit prices over here. That is a bit of a concern, especially if that decides to cross beneath the Tenkan Sen. Be aware of that. Keep an eye on that one in particular. However, for a positive sign, we are still above the cloud at this point in time. But if we take a look over on the right-hand side in terms of all the moving averages, we are firmly beneath the 100-day moving average, being the white line. We've been trying to get above that and failing miserably in terms of different tests and so on like that it's been doing. And we're also below the short-term moving averages. But every time we've tried to test this quarterly VWAP, we seem to keep on bouncing off it. So we're getting a lot of mixed signals when it comes to Ethereum, but there doesn't seem to be a good breakout up above, and there doesn't seem to be a breakout down below. So just need to wait for one direction or another in terms of trying to figure out exactly where to go with all of these. So still a lot of dynamics at play, and we've really, really got to take a look at all the different factors that are coming along. And I think, like I was saying before, Yash has covered all of those aspects beautifully in terms of all the different changes that are going on in the market with those infographics before. So if you didn't get a chance to have a look at all of that before, go back to the start and re-watch that good 10 minutes that Yash was talking about all those aspects, because they were really, really brilliant and covering a lot of different aspects of the market. Above all, keep an eye on all of the different areas that are moving around, especially when it comes to the factors of the strength in gold and also the indecision that's going on with a lot of the indices right now as well. But really keep an eye on those levels and make sure you really are keeping a good close eye in terms of the level of risk that you've got going on with everything as well too. With that, I'll pass it right back over to you, mate, and we'll make sure we welcome everyone towards the weekend recording that we'll have a look there. And we'll leave it over to you for the concluding remarks, my friend.
Thanks for that, Steve. I am in complete agreement with the recent gold move, and we've discussed the geopolitics that have added to that. I think the risk-on narratives tied to the Russell and, let's say, the crypto markets, if they continue to keep correlating, that would definitely be an interesting event too. But on that, if you've liked what we shared with you today, especially the infographic content, I'm trying to do some new stuff and trying to bring out ways for you to be a little bit more engaging while at the same time informative. Drop us a like. It really goes a long way. If we hit above 10 likes, that's going to be awesome. So get us up there, guys, into the double digits reason. But yeah, if there's anything we could do differently, or is there something you liked in particular, drop it in a comment, or even anything you would like us to cover. But on that, if you've been enjoying the journey and you like our banter / actual analysis as well too, just drop us a subscribe and join us along the journey. But on that, thank you so much for joining us today, and we will see you on the next one.
So in terms of things as well too, thanks again to Mark as always in relation to all of his great comments. And if you are still listening as well and you do want to leave a comment down below in terms of a specific word, go with Yash's infographic. I reckon a bit of support in terms of that there as well too. Other than that, thank you so much for watching. We'll catch up in the weekend.
Thank you, Mark, and everyone. See ya.
See you soon.